Welcome to Crypto Insider USA, the ultimate destination where crypto chaos turns into clarity and where your digital wallet grows wiser with every story. Today we're diving deep into one of the boldest Bitcoin moves we've seen in a while, a financial chess game that's got Wall Street, crypto Twitter, and digital degens all buzzing. Picture this. You're walking through a garage sale and you stumble upon a rare painting worth millions, but it's dusty, half buried under old VHS tapes and selling for pennies. Do you grab it? That's basically what Strive Enterprises is trying to do with a stash of nearly 75,000 Bitcoin from the ghost of Mt. Gox. That's right, Mt. Gox, the infamous crypto exchange that collapsed in 2014 and took thousands of BTC down with it, is suddenly the center of attention again. Why? Because Strive is making a $7.9 billion bet, not on the next bull run, but on a discounted treasure trove of Bitcoin claims. With BTC hovering around $106,000, this Ohio-based financial firm isn't just buying Bitcoin. They're hunting down legally confirmed, court-processed, bankruptcy-approved Bitcoin claims. Distressed digital assets that have been stuck in legal limbo for a decade. The goal? Simple yet daring. Get exposure to Bitcoin at a discount and beat BTC's price performance over the long run. Sounds crazy? Maybe. Genius? Possibly. Risky? Absolutely. But that's exactly what makes this one of the hottest crypto news stories of 2025. Strive has partnered with 117 Castell Advisory Group to track down and acquire these claims, including some of the largest held in the Mt. Gox bankruptcy estate. And they're not stopping there. They're planning a mega merger with Nasdaq-listed asset entities, which will not only take the combined firm public, but also help them raise up to $1 billion through equity and debt to scoop up even more BTC. Yep, they're building a war chest for digital gold. The plan is bold, some would even say brazen, but it taps into a bigger theme emerging in crypto finance: strategic accumulation, not speculation. In other words, they're not chasing the highs, they're buying the dips of someone else's misfortune. And here's the real kicker. Because these are distressed claims, Strive might be getting BTC exposure for far less than market price. Potentially 30%, 40%, even 50% below spot. It's like buying Bitcoin on Black Friday. Except the sale is happening in a courtroom instead of a crypto exchange. Now let's pause for a second. Isn't it kind of wild that in 2025 we're still dealing with the aftermath of a 2014 exchange collapse? I mean, do crypto bankruptcies come with longer warranties than refrigerators? Seriously, how? Many times do we have to learn that not your keys really means not your coins. But for all the chaos Mt. Gox caused, it also left behind one of the most sought-after Bitcoin vaults in history, and Strive wants in. Now here's why this matters beyond just one company. If Strive pulls this off, if they beat BTC's long-term returns by buying discounted claims and accumulating smartly, they could become a blueprint for future institutional crypto plays. We might see hedge funds, pension firms, and even sovereign wealth funds copying this model. Why buy Bitcoin at full price when you can get it at clearance? But of course, with great opportunity comes great risk. Many of these claims are tied up in complicated legal frameworks, slow court systems, and unpredictable payout timelines. And let's not forget, the Mt. Gox trustee has been trickling out repayments for years, meaning there's no guarantee on timing or even on full distribution. So Strive isn't just betting on Bitcoin, they're betting on bureaucracy, lawyers, and time. That's not just a crypto trade, that's a patience trade. Yet it's this kind of strategic risk-taking that defines a maturing crypto economy. We've come a long way from meme coins and pump groups. Today, companies like Strive are building sophisticated, high-stakes strategies that blend traditional finance with blockchain opportunity. And with their planned merger with asset entities, Strive is also positioning itself for broader market credibility. Being listed on Nasdaq gives them access to capital, compliance, and institutional trust. Three things that have historically kept crypto firms on the fringe. It's a move that could transform them from an aggressive niche player to a respected titan of crypto finance. And guess what? This might also boost Bitcoin's long-term fundamentals. Why? Because every time a firm like Strive locks up BTC, claims they're effectively reducing circulating supply, and reinforcing the narrative of Bitcoin as a long-term treasury reserve asset. It's like digital gold going into a vault and staying there. So what can we, as crypto enthusiasts and investors, learn from all this? First, pay attention to where the smart money is going. Second, don't sleep on old news like mint gox, and sometimes the biggest moves are buried in forgotten headlines. And third, understand that in crypto, the discount isn't always where you expect it. Sometimes it's in courtrooms, not charts. So whether you're holding BTC, stacking sats, or just riding the blockchain roller coaster, Strive's strategy is a reminder that crypto is evolving. And so should our thinking. If you found this story eye-opening, make sure to smash that like button, subscribe to Crypto Insider USA, and hit the bell icon so you never miss a moment of crypto clarity. Drop a comment below and let us know. Would you invest in discounted BTC claims? Or is this a legal labyrinth you'd rather avoid? We love hearing your thoughts, your takes, and your hot crypto gossip. And remember, this is just the beginning. We've got more deep dives, shocking headlines, and behind-the-chain secrets coming your way. So stay tuned. And as always, we'll meet again next news, same channel, same time.